So we're seeing declines on the dollar today. We're coming into this key level of support at the flat sort of 100 level here. So you can see sort of from 99.9 up until almost 101, we have this quite major level of what used to be resistance and now is being used as support. So it'll be very interesting to see if the retail sales today will come out positive or negative, see what type of reaction we will get from this level. Overall, my bias hasn't changed too much. I think I'm more on the side of a 25 basis point cut. I don't view the data from the US as severe enough to justify an aggressive cut, so 50, for example. So if we do get that 25 cut, I will expect some slight bullish movements or ranges, and then maybe some more movement to the downside, something along these lines, and maybe come sort of intersect this trend line here. Hi James, we're happy you're here. That's good to hear. I'm happy that I'm here as well. Happy you guys are here. Nick is on his way to a wedding or at a wedding. So congratulations to, I think it's his sister that's getting married. So obviously congratulations to them. So yeah, that means I'm taking over the first half or the first bit of this show today. The indices markets aren't moving too much. We've got the German 40 or the DAX is up 0.3%. We've got the Nikkei down 0.33%. We've got NASDAQ up 0.63%. We've got the FTSE 100 or UK 100 up 0.49%. The US 30 is 0.33 or Dow Jones. We've got the S&P or the US 500 up 0.44. So nothing crazy. Very relatively flat so far. Nothing really to shout about. Gold, I mean, a lot of the assets are actually just ranging, really. You can see on gold, there's been very, very little movement here. Since, actually, when did this start? Since the Friday, actually, we've seen very little. And that's mainly due to the Fed cuts coming. There'll be a lot of traders sat on the sidelines and even taking profits from here. So it wouldn't surprise me if we actually do see a continued downturn on gold as we head into further approach FOMC further. So potentially just some sort of moves along like this, and then maybe we'll get that pop as we get the FOMC meeting. But yeah, for today, I wouldn't expect anything from the markets. It's kind of the silence before the storm, as we can call it. Bro tells if it's going up or down. Why don't you tell me if it's going up or down? How about that? Let me flip it. Tell me whether to buy or sell. Would like you to look on USA retail sales, CAD CPI news releases so that we can plan our trading. Yep, they're not out yet. We've got the retail sales here, so they come out in 11 minutes. So we will look at those together, not an issue. For now, let me have a look. I was in an oil long position here this morning. So this was taken off the 15-minute chart. So what I can do is have a quick breakdown of this position and explain why. I mean, it is just a technical trade, so nothing too complex behind this one. But essentially, if we look at the H4, looks like we're starting to have a little pop to the upside. We're having some rejections on the H4 down here. We created a higher low. So in the short term, maybe the start of a smaller correction on the higher timeframes. We can see the hourly timeframe is drifting to the upside. The main factor for this was the reaction that we had here at the daily pivot point. We saw, quite a nice move to the downside, rejection, bullish candle close off there. Went down to the 15 minutes and then basically took the entry when I got the entry signal down here. So again, very little movement here. We're pretty much at break even. So this is just a 1 to 1.5. So pretty even trade in terms of risk to reward, but I'm happy to take it. I took it at 2%. So if I hit take profit, it's a 2.5% gain, which I'm more than happy with. So yeah, we'll see how this one goes. The Australian dollar Swiss, I'm also watching that one. Not really looking to enter it right now, but you can see I've got my markups here ready to go. So let me delete that. So I'm just waiting, really. I'm just not convinced of the reaction we're seeing here. We do, of course, have the... Oops, where's it gone? Let me get that back. Here we go. We've got the edge finder here. So we've got the Australian dollar Swiss as the second most bearish rating, right behind the Nikkei. So let's have a look at some of the data for this one. Just keep an eye on the time here. Got 10 minutes until retail sales. So Australian dollar Swiss historically is bearish. We can see over the past 10 years, historically it's down 0.74%. Retail is long. COT data is not registering here. It's relatively flat. The trend is bullish, so that's not a negative reading for the trend here. I've just noticed it's gone to neutral. Has it been taken off? Oh, interesting. It's actually been taken off a bearish reading. So that's actually kind of dampened the idea there. So it's not on the top setups anymore.
With Pulver Alerts, you get access to the complete log of all of Chris Pulver's trades. But who is Chris Pulver? Chris has over 20 years of trading experience, and he's a licensed money manager. He trades all aspects of the market, including Forex, stocks, ETFs and futures, crypto, commodities, and just about everything else. Let's talk more about where you can find these trades. Inside of the A1 Trading Discord, on the left-hand side, you'll find Chris's section. It's broken up into different categories to make it easier to find the trades you're most interested in. Here, you can browse his trading journal, where he shares videos and general market analysis, his indice trades, commodity trades, Forex, stock and options, and his futures trades. All trades come with analysis, including entries and exits, risk to reward, and more. We're very excited for the future of Pulver Alerts, and we hope you are too.
Look, man, it looks like 50 basis points is reality. And so I was considering, like, I didn't think it made sense a week or two ago, but I think now with the gap between September and November, I think it gives the Fed the runway and the window to like justify why, because they could say, if we only needed 25 basis points and we had more sensitive data coming in over the next month, we want to make sure that we kind of get ahead of it. So that way they can maybe cushion for softer employment data that maybe comes out in October. In fact, we'll find out October 4th because we have non-farm payroll. So more unemployment claims, non-farm payroll average earnings and unemployment rate, plus our job numbers. We can see where those trends are going. If the trend, shifts all of a sudden, if we go to, let's look at Edge Finder here and go to the labor market. I mean, non-farm's been terrible, and we know it was going into July and August, where we saw, everything was kind of collapsing at the same time. We go to employment data, labor market data here, NFP, ADP. Let's take a look at all this stuff. So NFP. So here's Edge Finder NFPs. The trend has certainly been lower. And I mean, I suppose if we came in with non-farm payroll, this would be where like the Fed would just absolutely thread the needle. If all of a sudden non-farm goes from this 114 low on a miss of forecast, and all of a sudden we go up here. If we printed like a 160, right, and all of a sudden the trend is back up, and what we might see is that steepening in the 2 and the 10, like I talked about. We might see the 2 and the 10 actually dip back down and actually go back lower. And maybe it gets inverted all over again. I don't know. But I think there is an opportunity for employment to look better. And I think going that 50 basis points may see the market actually just kind of like the momentum that it's in. I still don't feel super comfortable. And what are your thoughts about this? I still don't feel super comfortable about just full-on bull market melt up for the rest of the year. I think we're still going to have some volatility coming into the election. I still think we have volatility by the end of the year. Nobody knows the future, but it's going to be pretty wild, man. So anyway, 50 basis points. Are you convinced? Is it the right decision for the Fed or not? What are your thoughts?
I don't think so.
You don't think 50 basis points honestly, you think it's incorrect?
I don't know if it's necessarily incorrect. I just don't agree with it. I think it's going to happen now, but I don't think, that the Fed should really be stepping in until they really need to be. But that's never been the narrative for them. So the fact that they're even cutting this time around is not something that I would necessarily agree with. And now seeing a harder cut than what we expected or what the Fed has been projecting this whole year was incremental cuts of 25 basis points. Would result in sort of like they have the luxury to do so. It's fine for interest rates to come down because inflation has come down, because the job market is doing okay. But the fact that they're going deeper, they're doing 50. Some analysts on CNBC and Bloomberg I was listening to yesterday were begging for a 75-point cut, which probably won't happen.
I think that's a terrible. That to me is like you're asking for an emergency cut. You're asking for the Fed to admit that they're dead wrong. I think 75 would be probably the worst reaction for price, in my opinion.
I think they're already admitting that with a 50 basis point cut.
Yeah.
I think if everything was fine, we would see like a year or two of 25s each consecutively for the next several quarters. But now we're seeing a 50. Who knows what they're going to do in the next meeting? But they haven't indicated that they were going to do a 50 basis point cut. This is just what's on the Fed Watch tool. So, I mean, it's not necessarily a guarantee, but a day before the interest rate decision, we're seeing 61% chance that there's a 50 basis point cut. That's a pretty solid chance for that to happen. I think this is, in my opinion, the bigger the cut, the less bullish I am. I think we could get a positive reaction, at least at first, but I don't think going into Q4, this is what we want to see.
Right.
And 2025 is not looking good, in my opinion. So honestly, the bigger the cut, the more bullish I am on gold, because that means the economy's worse than we thought, jobs market's not good.
Yep.
Fed's got to step in.
Yep.
It's going to devalue the dollar either way, 25 or 50, 75, whatever.
Yep.
I think gold is going to outperform. It's already outperforming the NASDAQ. It's up like 25% on the year. Tech stocks, the tech index itself is like 18%. So I think gold will continue to outperform. And if we get a harsh reaction to the downside on this decision, I'm probably going to be looking to pick up GLD or something like that.
Long on Euro at the moment. I'm pretty bearish on the USD longer term. I'm looking for mainly opportunities that favor USD weakness. However, I'm staying open-minded coming into the news we have this week. I have been eyeing up some longs on dollar yen, but I will stay out the market because I don't want to get involved another USD pair coming into the Fed interest rate tomorrow, because I'm already long Euro. This is already break even, so risk is free, but at the same time, I just don't want to get involved with two separate pairs involving USD tomorrow. So if I wasn't trading Euro USD, I probably would have just entered this USD JPY. This looks like a really nice buy. I'm expecting some upside for the yen pairs purely as retracement. I do think there is still a long way to go in terms of the downside with these yen pairs longer term, but I do anticipate a bit of retracement. The market has been falling quite aggressively over the past few weeks. A lot of these yen pairs have been falling pretty hard to the downside, so I do think it's time for us to see a bit of a retracement with some of those pairs. And dollar yen to me look the best, but yeah, I'll be holding my horses a little bit with those pairs. What's up, guys? Hope you're doing well. Yes, we'll take a look at Aussie CHF. That's a pair Ash I do like. Keras, what is up? Second time today. Hope you are doing good. I think I'll just be doing 30 minutes on this stream, and I think someone else will take it over after me. But yeah, we'll take a look at Aussie CHF. I do like Aussie CHF quite a lot because of the area we're trading at. Aussie CHF very, very close to the all-time lows, and I am looking for a bounce off this area. If the market was to revisit this level, I would like to find some entries, mainly because if I do zoom out and look at the bigger picture, you can see that Aussie CHF has been falling, but this level has proven to be quite concrete. And if we can remain above this, I do think we can catch a move possibly back to around this area here, because effectively price has just been ranging up and down between these two price points. So there's a good probability we can push back to the upper end. And looking at it from a swing point of view, the risk reward looks very, very inviting. You can get some entries near around there, stops below the level. You know, effectively that kind of is what I'm eyeing up. So Aussie CHF I really do like, just looking to take advantage of that range. But yeah, I'm quite bullish on this one. Longer term, probably still pretty bearish. And if we get back up there, I'll probably be looking to sell it back down. But due to where we're trading right now, the nearest or next best opportunity I see is definitely some longs of 0.561. So that's kind of what I'll be eyeing up for Aussie CHF. What's up, OP? Hope you're doing good. Welcome, welcome. Still looking for UG sales due to weakness from USD and potential rate hike from yen. Makes sense, of course. And again, I actually do favor USJPY to keep falling eventually. But how price is looking and how the technicals are shaping up, I do think we'll have a bit of a pop to the upside. Now, I do definitely agree. I do feel like USJPY is going to continue lower. I'm very bearish on USD as well, longer term. As well, and I do feel like yen will gain some strength as well longer term, and dollar yen will probably fall with the rest of the yen pairs as well. So I am looking for something like this with dollar yen, a push up and then continuation. But I'm interested in that short-term push up. Of course, I could be wrong. That's why I trade with a stop loss, and that's why I manage my risk. But at the end of the day, where we're trading from a technical standpoint, right back at this low. Last time we were here, we had a massive push to the upside. And now we come back to that same area. We've got this lovely descending channel. Price is hugging the bottom of it for dear life. And it looks like we're starting to see some momentum creep back into the chart. So I do expect to see some relief and some upside, but I am in the bearish camp still longer term. And if I can catch a buy, great, because I'll be looking to set it back down. And that's the same kind of logic I have with a lot of these yen pairs. They've all seen some really nice downside moves, but they do look quite stretched. So I do anticipate the market to put in a temporary bottom, pull back, and then continue. So that's very much my thinking with a lot of these yen pairs. But longer term, I'm pretty much bearish on all of them. I particularly like Swiss yen. I know this one's not talked about as much because it's a bit more of a a very minor currency pair, potentially even exotic. Some people might view it as, but it's a really nice opportunity here with Swiss yen, because the prior all-time high was all the way back here. Around 158.330. I do expect us to creep back inside that high. So I'm expecting a lot more downside for Swiss yen over the next coming days, weeks, potentially months as well. So this one looks really good to short. Again, just need a healthy pullback. This is the daily chart. Again, looks like a lovely head and shoulder pattern there. So you got your left over there, you got your head up there, and the lovely right shoulder. Of course, that being the neckline as well. So I'm looking for that lower high to form to catch those shorts on the way down. So I'm eyeing up a lot of the yen pairs, just picking which one will be the best, really, because they all kind of move in a similar fashion. There's no point in me trading all of them. Just need to see which one will give me the better opportunity.
Why is dollar rising? Why is dollar coming higher? What's going on? Why is euro falling? Why is the currency market crashing? I'm just going to tell you one thing for free. That's a sell price. And you suck a buy. 3, 4, 5. Go back to sleep. Come back tomorrow. Today is not important. Because if I tell you that this might be the peak of your dollar, what do you mean? What do you mean? Can we just continue buying your dollar? I'm going to give you a bit of a different scenario today. That even though everything in my body screams higher, tomorrow you're going to see a delivery that is not only perfect, but also is going to say that by the end of 12 months, we are going to see the Fed also agreeing that we're going to be at 275. And if that doesn't happen, if Jerome Powell comes in and says, hey people, nice to see you today, but I believe we're going to take it a bit slower, that the decrease in inflation has been moderate, that labor market is loosening up, but the current data doesn't warrant us to do a lot with the current interest rates. they're only going to do 25, and then they will sit and wait. Okay. Market tomorrow is pricing in a double rate cut, I believe it was. Yeah. I don't believe it. I don't believe it. Can you believe it? And if you tomorrow come back and say, hey, look at that, they did rate cut by 50 basis points, you're an idiot. Nobody's an idiot if you think 50 or 25. No, random. Just random. It's opposite. If you're reading the chart ahead of you, if you see, I'm not trying to be nasty about it. If you look at the screen ahead of us, it says current rate is 525. The probability of whatever rates tomorrow is that it is 65% or 65% that the interest rates gonna be 475 to 500, meaning 475 to 5, which is 50 basis point rate cut. It's a double. That's what the market is most likely pricing at the moment. So, the Shrek family, you are a winner chicken dinner. Come over to me and we'll eat dinner together. If dollar tomorrow, if FOMC delivers a 25 base cut, instead of 50, what's going to happen? It's going to be a very clear repricing. Euro dollar is going to go lower. Dollar is going to go higher. Sorry about that. Dollar is going to go higher. S&P, Nasdaq are all going to fall.
As of yesterday, this was 52% and this was 48. So the markets have begun to aggressively price in more aggressively price in a 50 basis point cut idea for tomorrow. So need a bit of water. The challenge for me with the Fed cut tomorrow, the challenge for my outlook is this aggressive of a cut, this hefty of a cut is almost scary because it sort of implies that the Fed is behind. They tend to, in my opinion, or in my experience, they tend to want to do 25 basis point cut increments. They don't want to scare the market. They don't want to, they want to take things nice and steady. I think the last time they did a 50 basis point adjustment was in 2022 when they were fighting high inflation. But a 50 basis point cut right off the bat, to me, implies that they're behind the curve. They are worried about the softening labor market. They're not as concerned for the risk to inflation. If they're willing to go ahead and cut 50 basis points and front load these cuts now, that I believe that the risk for a resurgence of inflation is significantly higher if we begin front loading these cuts now, especially ahead of the holiday season, which of course will kind of skew things, I think, a bit on inflation side of things. But either way this goes, we are looking at cuts tomorrow. If we don't get a cut, that will absolutely be a monster hawkish surprise for the markets, and I think we'll see stuff like Nasdaq ES fall to the downside, USD pop to the upside pretty hefty on a zero change, which I don't think anybody thinks that's going to happen tomorrow. Now, if we get the 25 basis point cut, I'm not getting positioned ahead of this. I never get positioned ahead of data like this. I'm not a swing trader. I'm a scalper. So for me, I'm not going to be interested in getting positioned ahead of it. But I will say that a 25 basis point cut would be, I think, dollar positive. So if you guys are looking at something like UJ buys, you know, a 20, you're going to want to see a 25 basis point cut. Now, I also think that it's going to be a bit of a challenge trading this tomorrow because there's going to be volatility like we haven't seen, I think, in quite a few FOMC meetings, with the probabilities of a 50% or 50 basis point cut being as high as they are. Either way it goes, if we get a 25 basis point cut, I think the markets are going to react to that pretty heavily. But it's just a matter of how solid the volatility will be. So regardless, to simplify it, on a hawkish stance, as far as I'm concerned, anything 25 basis point cut or less, along with a concerned Powell. So Powell comes out and you know, he's overly concerned, I would say, about consumer side inflation. I would anticipate that to be leaning hawkish, which would theoretically push the dollar to the upside. A 50 basis point cut, while it's already 61% priced into the market, that's still pretty close to 50-50. There's going to be some calibration, in my opinion, if we get that. I would like that in order for me to take something like dollar downside or equity upside off of a 50 basis point cut tomorrow. I also want to see a pretty neutral Powell, a nonchalant, we're not worried, we think we're taking the appropriate steps, you know, we're confident in what we're doing. All these sort of, a 50 basis point cut to me communicates that they're behind the curve. But if Powell can come in and say, nope, we're doing what's appropriate, we're doing what we feel is necessary to keep the economy in balance, cool, that leans more dovish than we did a 25 basis point cut. We're not super confident about consumer side inflation, yada, yada, yada. So 50 basis point cut plus a relaxed Jerome Powell, plus a 100 basis point cut dot plot projection for the rest of the year, that will give me good dovish indications.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.